Hi everyone. Today we are meeting with the another past paper discussion. This is a kick start of the next upcoming exam. Therefore, today we are going to discuss 2021 December 2021 paper. Then throughout this discussion, you can refresh your knowledge and you can get an idea how the examiner thinks and what up to which extent it can be tested, and you can you can familiarize with the exam context. This kind of a revision, you can consider this as a revision because you can recall the things you have already learned. In this session, we are going to discuss in detail and summarize, and I will give some specific point which you can write down your short notes and which will be important to your final examination. Therefore, we will start the session without further discussion. I will give you a summary or brief introduction about your paper. It is a 3-hour paper and you will receive 15-minute reading time. Exactly. Then total marks 100 marks, and this paper contains 3 sections. Section 1, it will contain 10 MCQs which give you 20 marks, 2 marks each. The second section, it will give you 40 marks. Each question will give you 10 marks. That means 4 questions will be there in the section 2. The final section, that is third section, there are 2 questions. Each will give you 20 marks each. Then 20 into 2, 40. That's how the composition of your paper. Therefore, we have an overall idea about the final exam paper. That's how it will looks like. Okay, it should be written in English. You might familiar with that. Okay, section 1, all questions are compulsory. You will receive 20 marks. The recommended time 36 minutes you need to spend. Okay, we will start now. The first question, first MCQ question, we will look at what it asks to do. Consider the following statement made in relation to traditional management accounting technique. There are 3 statements and we will see what we need to do. It says that consider the following statement made in relation to the traditional management accounting technique. Traditional management accounting. Okay, there are 3 statements and we will see what is the requirement. Which of the above statements best explain the reasons why traditional management accounting techniques are considered inadequate in the modern manufacturing environment? Why traditional management accounting is not suitable to the current context, current manufacturing environment? Therefore, you have to have an idea. Now, you have read the question. Now, you have to look at these 3 statements with having that idea. First one, they generate ineffective performance measurement result that could lead to inaccurate decisions. It can be inaccurate performance measurement. As an example, when you are going to evaluate variance analysis, your price variance will be favorable if you purchase bulk quantities. The problem will arise when you purchase bulk quantities. Your holding cost will go up. You will purchase unnecessary stock beyond the limit you will purchase. Then it will be a problem. That's why the generate ineffective performance measurement result that could lead to inaccurate decision. That can be. Even sometime you might take return on investment as a performance measurement of the divisions under transfer pricing and divisional performance evaluation. Sometimes there will be some profitable investment in the divisional managers may reject if those investments fall below that divisional ROI. But if you look at about the overall ROI, if you look at about the net present value or residual income, it might be a viable investment. That means inaccurate decision can be made. That is correct. That answer I will say that is a correct one. Right. This is correct. First statement is correct. Then second statement, the modern manufacturing environment needs better methods of allocating cost based on the cause and effect relationship rather than absorption costing. In the absorption costing, what will happen? You will use a common basis and allocate the overhead cost, but this says, give me a second. Okay. This says, what this says? This says that modern manufacturing environment, you have to look at the cause and effect relationship. What is the reason for rise in the cost? Based on the cause and effect, you have to allocate the cost. That's why it's suggesting ABC without considering traditional absorption costing. Therefore, second statement also accurate. That is also correct. Right? Third statement, the standard costing system is based on assumptions that are invalid in today's environment. We will assume a fixed environment, but can we assume a fixed environment? I will take an example. Material price, assume price of soap. Can you imagine is it constant? Can you imagine, assume you are taking input, petrol and diesel. Can you imagine it will constant forever? No, it will be changing rapidly. Therefore, based on the market condition, it will change. Therefore, we are operating in an environment which are continuously changing. Therefore, standard environment or constant environment cannot be assumed. Therefore, this is a correct statement. The standard costing system is based on assumptions that are invalid in today's environment. Some assumptions are not valid with the today's environment. You can say that this is also accurate. Now, statement 1, 2 and 3 accurate. All three are accurate. Then the relevant, the correct answer is D. Okay, your correct answer is D for the D for the question 1. That is the correct answer. Agreed, that is first question you have faced. Right, now you have an idea, traditional management accounting and modern management accounting. Some concepts you have learned in traditional management accounting may not be relevant to the modern management accounting environment. That is the first question you need to answer. Okay, we will move to the second question. Okay, we will go to second question. Right. Look at this, will you? A furniture factory makes two types of chairs, A and B, using its limited skill labor time. Labor time is the limited resource or the bottleneck resource. The factory has a standard weekly production plan that fully utilizes the available skill labor. Okay, this is the standard weekly production plan. The following table has been prepared based on the marginal costing principles. Okay, marginal cost, based on the marginal costing principle, they have prepared this table. A and B, total contribution per unit, 5,400 for A, B 2,500. Total conversion cost per unit, 1,600, 2,500, skill labor hours. Shall we look at how many labor hours are available? Right. A required 4 direct labor hours. Currently you are producing 40. 4 hours per unit, 40 units per week. A required, if we take this one, 160 hours. If you look at about B, skill labor 2 hours, standard weekly production 80. 2 into 80, again 160 hours for B. Altogether, the available hours, okay, total available hours are 320 hours. 220 hours, right? That 320 hours is the limited resource, or we can call it as a bottleneck resource, because it has already mentioned labor time is limited, right? The weekly fixed production overhead cost is 80,000. what is the maximum weekly profit of the factory if the production plan was based on the throughput accounting principle? What is the meaning of throughput accounting principle? In the throughput accounting principle, the only variable cost is direct material cost. Except direct material, all other costs are fixed. We have to consider them as a fixed. Therefore, now you have to look at this is based on marginal costing principle. This product mix based on the marginal costing principle. If you adopt throughput accounting principle, what should be the profitability? You need to calculate. When we are going to make the calculation, the total contribution per unit, this is selling price minus variable cost. Clear? Total contribution per unit, how did you obtain this one? Selling price minus variable cost. But when we are going to calculate throughput contribution, you can deduct only what? Selling price minus direct material cost only. But here total conversion cost per unit given, that conversion cost mean except material, other variable cost. If you add it back, contribution per unit at conversion cost, then it will be the throughput contribution. Clear? Okay, we will work out. Now you have the idea. Now we will work out what should be the answer. Okay, I will work out this one. Okay, now we are going to calculate I think you can see. Okay, there are two types of product. There are two types of product. I'll assume. Okay, there are two types of product, product A and B. Product A, product B. Product A and product B. As at the moment, contribution per unit. It has mentioned product A 5,400. 5,400. B it is 2,500. 2,500. This is contribution per unit, and total conversion cost per unit is given. Conversion cost mean excluding material. Then if you add the conversion cost to the current contribution, you will receive the throughput contribution, because throughput contribution is selling price minus direct material cost only, right? Then I will add conversion cost. Conversion cost. Conversion cost. The conversion cost for A 1,600. 1,600. B it is 2,500. Now you have the answer. Now you can get throughput contribution per unit. Okay, throughput contribution per unit. Throughput contribution per unit. 5,400 plus 1,600, it will be 7,000. 7,000. B 2,500 plus 2,500, 5,000. Right. 5,000. Now you have the throughput contribution per unit. Now calculate return per factory hour. return per factory hour, or you can calculate throughput contribution per bottleneck hour. Bottleneck hour per unit, bottleneck hours, bottleneck hours per unit. A bottleneck hours, skill labor hour is the limited resource, 4 hours. Here it is 2 hours. 2 hours. Right. Now calculate return per factory hour. Return per factory hour, 7,000 divided by 4, it is 1,750. 1,750. Here it is 5,000 divided by 2, 2,500. 2,500. Now, based on return per factory hour, or you can calculate throughput accounting ratio. To calculate throughput accounting ratio, you have to calculate the total factory cost. It can be calculated even with this information. Now you can determine ranking, which product should be given priority. This factory hour, this product, it gives 2,500 per factory hour. Okay, bottleneck hour. Here it is 1,750. You will give the rank. If you make the ranking, first rank goes to this one, second rank goes to this ranking. Now you need to decide how many hours should be allocated to A, how many hours should be allocated to B, right? Okay, I will do the computation in a separate sheet. Okay, total hours available, bottleneck hours, available, as we have already computed, 320 hours. 320 hours, right? Then out of this 320 hours, we have decided to give the priority to which? Product B. If you give the priority to product B, then how many hours should be allocated? Now if you okay, if you move to this one, first priority should goes to first product B. Product B has a total maximum weekly demand. Currently you are producing 80, maximum demand 120 units. Okay, 120 units into each require 2 hours. 2 hours. That means you have to allocate 240 hours. There is a balance. Balance 80 hours are there. Balance 80 hours. Right. The balance 80 hours should be allocated to A. Each required 4 hours. Maximum demand 50. 50 into 4, 200 hours are not available. Then 80 hours should be allocated to A. Balance goes to A. We have 80 hours. Each required 4 hours. That means we can manufacture 20 units. 20 units. Then 80 hours will be utilized fully. Right. Now composition, A 20 units, B 120 units. 120 units. Right. Now this is the composition. Now you have to calculate profit. Now you have the throughput contribution per unit. Throughput contribution per unit 7,000 and 5,000. Then you can easily calculate total throughput contribution. Right. I will do that one. Right. Product A 20 units. Right. Into what is the contribution per unit? Contribution per unit, throughput contribution per unit is 7,000. Right. It is 7,000. 7,000. Then it will be how much? 140,000. Yes. 140,000. B 120 units, each will give 5,000. It is 600,000. Total. Then you can say total throughput contribution. Throughput contribution 740,000. Now, when you are going to calculate the profit, you have to deduct what? You have to deduct fixed cost. You have to deduct fixed cost. Okay, what are the fixed cost? Total we call it as a total factory cost. Total factory cost. Total factory cost. Total factory cost include conversion cost. Can you remember conversion cost was there? Product A. If you have the paper with you, product A total conversion cost for product A 1,600. The standard weekly production 40. You have to multiply it to the total capacity because it is a fixed cost. Therefore, under total factory cost, Roman number 1, conversion cost. Conversion cost. This is kind of 10 marks question but giving only 2 marks, right? Conversion cost. Product A, take product A. Conversion cost per unit 1,600 should not multiplied by actual production. It should be multiplied by the standard weekly production, that is 40. 40. Then it will be 64,000. Right. B, total conversion cost 2,500. 2,500. Standard production 80. 80. Then this is 200,000. In addition, it has given the weekly fixed production overhead 80,000 to fixed production overhead, that is 80,000. Altogether, you need to deduct 344,000. Then, sorry, answer should be 396,000. This is the correct answer. 396,000 is the correct answer. Answer is D. The correct answer is D. Now you can see the process. Simply we have done a full computation. The answer should be 396,000. Answer is D. Answer. The correct answer for second question is D. Right. I hope you have. Now we have done the computation. Now you can see the answers. Now answers are given here. A 216. The correct answer is 396,000. Therefore, the correct answer is D. You have to select correct answer for the question number 2. This is relating to the throughput accounting ratio. The correct answer is 396,000. That is answer D. We have already done it. Right. Then we will move to the third one. Fill the blanks. Okay. We'll read it. The following paragraph discuss the difference between two management tools. There are two management tools. There's a blank. Roman number 1. Often makes use of information gathered from blank. However, blank focuses on business processes and managerial activities driving organizational business goals, whereas blank mainly focuses on the measurement of cost and performance of various activities, cost object and resources. Now you need to see the answers are given activity based costing or activity based management, and case and costing also been given. First we will see the match. Often makes use of information gathered from two. However, blank 1, Roman number 1, focuses on business processes and managerial activities driving organizational business goals, whereas mainly focuses on the measurement of cost and performance of various activities. It will be measure the performance of various activities. Definitely it is relating to activity based costing, but here you will measure the performance. When you are going to measure the performance, that related to you are going to measure the performance of an activity. It related to, as an example, you can minimize the cost if you reduce the activity volume. Therefore, it related to what? It related to, however, ABM, activity based management. Now you will gather the activity based management, gather the information from activity based costing. Based on activity based costing, activity based management will evaluate the performance. We will take first one. Activity based management often makes use of information gathered from activity based costing. That is the correct relationship. Again we will see whether it will applicable Roman number 1. However, activity based management focuses on business processes and managerial activities driving organizational business goals, whereas activity based costing focuses on the measurement of cost. You will activity based costing, you will measure the cost based on the activities you have consumed. Therefore, the correct relationship here, it should start with activity based management. Therefore, activity based management only available in item A, option A. Therefore, the right answer, the correct answer you have to select is A, because here it should be ABM, activity based management. ABM often makes use of information gathered from activity based costing, ABC. Now look at the relationship. However, ABM focuses on the processes. ABM focuses on business process, but ABC focuses on measurement of cost. This is ABC. Okay. Therefore, your correct, the accurate answer is A. This is accurate. This is the answer for third question. Third question, right. We will move to the next question, right. Fourth question. Look at, instead of setting the price by adding profit margin or markup to the product cost in accordance with the principles of blank, the manufacturer tries to match the cost of the product by subtracting the important verb product by subtracting desired profit margin from the prevailing selling price at the competitive product. Then what is that? You will deduct selling price minus required profit. Required profit. The answer should be what? Your answer should be target costing. This is the correct answer. Your answer should be target costing. According to the principles of target costing, what you will do, you will subtract the required profit margin from the selling price. Therefore, the relevant correct answer is B. You need to deduct the required profit margin. Target costing says you need to deduct the required profit margin from the desired selling price, right? Correct answer is B. That is the answer for question number 4. Okay, we will move to the fifth question, right? 2 marks given. The following are some of the costs incurred on newly developed product. You have developed a new product, right? Now, before reading them, we will look at what is the requirement of the question. Which of the above cost item would be included in computing the life cycle cost of the product? When you are going to calculate life cycle cost of the product life cycle, in a product life cycle, it has the stages: design and development stage, introduction stage, growth stage, maturity stage and decline stage. There are 5 stages. When you are going to calculate cost of a unit, life cycle cost of a unit, the cost incurred over the life cycle will be divided by output over the life cycle, right? Then you need to decide which cost should be included in your life cycle costing when you are going to calculate cost per unit based on the life cycle costing principle. Okay, first one, cost incurred on research study already carried out. Cost you have incurred on the research you have carried out. In which page you will incur this one? According to accounting standard, it should be written off to the P&L, profit or loss. But here, when you are going to do the costing, life cycle costing acts applicable for the product which is in a competitive environment, product like mobile phones which has a shorter life period. Therefore, we need to cover up the cost incurred from design and development phase to decline phase. Therefore, research cost you have already incurred, it has been incurred at the design and development phase. Remember, this has been incurred at the design and development phase. Okay, this is from the design and development phase. Design and development phase. Therefore, it is accurate. That is correct. That is an accurate answer. Okay, that is a relevant cost. Cost incurred on product design and development cost. Yes, again it is incurred at the pace of design and development. Again, it should be included. 1 and 2, both incurred in at the design and development phase. Third one, cost of materials and labor relating to the production, that is incurred in the manufacturing process. That is anyway a relevant cost, accurate, right, throughout the manufacturing process. Then cost of marketing campaign and advertisements. Once you start your selling and at the introduction, You have to incur marketing cost. It is a part of your cost because this product will last for short period of time. Assume a version of mobile phone, Apple iPhone 13 or 14. Once the new version come, all the cost including sales and advertisement cost, it should be included in the cost of the product because it will last for only up to 6 months, assume. Then you need to cover up all the cost you have incurred on in relation to the product you have launched. Therefore, it is correct. Marketing cost also to be included. Cost of fixed production overhead, which is directly attributed, which is arising as a result of this product. Yes, again it should be included. Therefore, all the costs given are relevant when we are determining the life cycle cost of a unit. Therefore, your correct answer is D. All of 1, 2, 3, 4, 5, all are accurate. The correct answer is answer D. Can you remember in the life cycle, this is design and development, then introduction, growth, maturity and decline. Okay, this is design and development, this is introduction, this is growth, this is maturity, this is decline, right. The sales will start from this level in the introduction. Growth pace you will go up, maturity like this and start to decline. Sales. This is how the life cycle operate. Clear? I think you have an idea about life cycle costing. Therefore, cost incurred from the design phase to decline phase, total life cycle, you have to consider the total cost and divide by the output. It include research expense, development expense, marketing expense, selling expense, advertisement, everything should be included when you are going to calculate the life cycle cost per unit. Therefore, answer is D. Right. That is the fifth one. We will move to sixth MCQ. Sixth MCQ. Look at it, will you? It says, a manufacturer utilizes a particular material purchased from the local market. However, the local suppliers import this material from China. They are import this material from China. Consider the following. Okay. There are three statements given. What is required? Which of the above would necessitate the manufacturer to analyze the price variances of the above material into planning and operating variance? In which circumstances? In which circumstances you need to analyze planning and operating variances? Now we will see. First one. The standard utilization of this material by the manufacturer is not accurate since an out of date utilization table has been used for this purpose. Utilization does not matter because you are going to evaluate material price variance. You are going to evaluate price variance. The utilization does not matter. It will have to compute separately. You have to look at whether it is or not updated, that is relating to the material usage planning and operating variance. Therefore, utilization is not relevant when we are going to calculate material price planning and usage variance. Therefore, this is inaccurate. Inaccurate. First statement is inaccurate. The second one, the Sri Lankan rupee has depreciated unprecedentedly against the USD. Yeah, it will affect your price because if the rupee is depreciating continuously, now today I have seen LKR has depreciated against the USD to 345, black market it will be 400 and 450. But when it is depreciated, your price will go up. When LKR depreciating against USD, it is beyond the control of management. it will impact to the planning, it will as a result of it, there will be a planning variance, planning price variance. Yes, this one is correct. Statement 2 is correct. Okay. Yes, statement 2. Third one, prices of the material in the world market have increased due to supply limitations. Material prices of the material, even in the world market, it has gone up, but beyond the control of the management, but it is a price sensitive. The prices can be changed. Therefore, again, under the current pandemic situation, again this one correct, because it is affect to the price change. Therefore, second and third statements are correct in relation to the planning and operating price, material price, planning and operating variance. Therefore, 2 and 3 correct. That means answer C. This one is the correct answer. C is the correct answer. Right. This is for question number 6. Right. Then we will move to the next question. Okay. Question number 7. Read this, will you? Now, a factory produces single product using sequential production processes. Okay, this product going through process 1, process 2 and process 3. It has a maximum demand of 10,000 units. Demand has restricted to 10,000. 10,000 units a week. This demand is expected to be stable for a longer period. It will stable for a longer period. The factory runs 6 days per week. 6 days per week, and following is the summary of the present machine capacity of each processes when operated at maximum capacity. Well, total machine hours per day 50, output per machine hour 20. That means daily they will manufacture 1000 unit. If you look at about process 1, 50 into 20, 1000 into 6 days, they will manufacture 6000 unit. They can process only 6000. Process 2, total available machine hours 25, right? 25 into 100, 2500 can manufacture per day. Then 2500 into 6 days, they can manufacture 15,000. 15,000. Then process 3, 50 hours available, output is 33.33 per hour. Then 33.33 per hour into 50 into 6, the maximum production 10,000. Exactly they can satisfy the maximum demand 10,000, but the problem is process 1. Now you need to manage. There might be some surpluses or in the other processes, right? Then you have to see in which process there is a surplus. Now what they asked to do, the best capacity modifying strategy for the factory would be, can you reduce from process 3? No, because it can manufacture 10,000 as required. 10,000 unit to be manufactured. Now you can manufacture 10,000, therefore you can't touch process 3. The only option available in process 2. What you can do, because you require to manufacture 10,000, but you time available to manufacture 15,000. Then that means you can curtail the time. Now you have your time by how much? You need to manufacture only 10,000. Therefore, 5,000 unit you will manufacture excess, that is excess capacity. 5,000 out of 15,000, you have a surplus capacity of 33%. Okay, 33%. You can curtail the capacity by 33%. Otherwise, you can say total machine time per day 25 into 6, 150 hours. But the requirement is 100 into 100, 10,000 it will be there. Additional 50 hours will be available. Then what can you do? What can you do? You can reduce the capacity of this one by how much? You can calculate, I will calculate in this way. You can reduce the capacity by 5,000. Currently you have the 15,000, right? Currently you have 15,000. 15,000. As a percentage, you can reduce the capacity by 33%. Okay, process 2, you can reduce the capacity by 33%. Okay, you can reduce the capacity 33%. That is correct. Now here, you have the capacity 50 into 6, 300 hours. Now you have to increase the capacity by another 4,000 unit, right? You can 6,000 should increase up to 10,000. Deficit is how many hours? Deficit is 4,000. 4,000 is the capacity required. Then you can process 1. In order to reach the capacity, you have to increase by 4,000 unit. The current capacity is 6,000. You need to increase the capacity by 4,000. Current capacity is 6,000. As a percentage, it will be 67%. Then what is your answer? You need to increase the capacity of process 1 by 67%. You can reduce the capacity of process 2 by 33%. The correct answer given here, reduce process 2 capacity per week by 33% and improve the process 1 capacity per week by 67%. The accurate answer is B. This is the correct answer. The correct answer for this illustration is B. B is the accurate answer. Okay, that is for 7th MCQ question, right. Now we will move to 8th MCQ question. Consider the following guidelines. There are 3 guidelines. Which of the above are true guidelines? You have to select the correct statement. Are true guideline. Selecting an appropriate budgetary system. Okay, if you select appropriate budgetary system in relation to the given 3 statement, which are more suitable, right? We will read the statement. First one, incremental budgeting. Incremental budgeting means we will add some figures to the last year figure and prepare the budget. Incremental budgeting may be appropriate for routine activities, whereas zero-based budgeting approach would be more appropriate for new business unit. Assume in zero-based budgeting mean we are not going to manage total revenue equal to expense. Zero-based budgeting mean you will prepare the budget while assuming you perform the job at the first time, right. Therefore, zero-based budgeting encourage initiative. You won't follow the total opposite side of incremental budgeting. Therefore, first statement is correct. If you do the routine task, no need to do some changes. You can adjust to the previous year figure based on the inflation and all, you can adjust. That is incremental budgeting. Because if you are doing a routine standard process, this one is correct. The first one is correct one. You can agree. If the management of a company needs to closely control fixed cost, activity based budgeting could be applied. Generally, when we are going to allocate fixed overhead, we will use traditional absorption costing and activity based costing. Activity based costing look at what are the activities which generate cost. If you control the activities, you can reduce the cost, right. Therefore, if the management of a company needs to closely control fixed cost, activity based budgeting could be applied. You can forecast the activity volume. If you reduce activities, then what you can do? You can reduce the fixed cost, because activities generate cost. Activities create cost. Therefore, this is a correct statement. Second statement are also correct. Third one, a participative approach would be suitable if the relevant managers are well trained in budgeting and cost are controllable. Well trained in budgeting, costs are controllable, because you can't apply. If they are uncontrollable, it is not suitable. If the managers are not properly trained, you can't apply bottom up approach. We call this bottom up approach. Bottom up, participatory budgeting. Everyone will participate and give their contribution to prepare the budget. Therefore, this statement also correct. All three statements relating to the budgeting are accurate. Therefore, your answer should be D, all of the above. The correct answer is D. Correct answer is D. All are accurate. Right. That is question number 8. We will move to question number 9. Look at it, will you? Okay. Now you can see a diagram distribution of NPV. First we will see the description, what it says. A company is considering two investment opportunities, option A and option B, of which only one will be accepted. That means those are mutually exclusive project. If one accepted, the other one you have to reject. Right. The following probability distribution were prepared using the Monte Carlo simulation method after considering all random variables that could be cause for the success or failure of the investment. Okay, distribution is given. The company has a high tolerance for risk. That means you are like, we can call, you are willing to take the risk. High tolerance, risk taking, risk taker. Okay, if you are a risk taker, then you will look at the most profitable option. Or if you are a risk taker, you will look at even a less probability there, you will look at the best out of best. We call max solution you will see. Okay, out of these two, what can you see? Which of the following is the best explanation of the above two option? If you look at option A, if you look at it is skewed to more probabilities given in the 100 to 150. Right, 150 or 200, this range, more probabilities. Okay. That means majority of NPV will be in this range. Right, majority. High probability, that means there is a high frequency. You can see high frequency, therefore this area. But this one distributed more probability towards the 300, 200 to 300 or 150 to 300, more NPV can be earned, right. You can have a higher NPV, more 250, but here it is less chance, less probability to having 250 and 300. Okay, we will see what are the explanation. Okay, first explanation, right. Option is A is more desirable to accept as it could mostly generate a positive NPV and has the highest NPV of 400,000. If you look at option A is this one, but it is limit here, not 400. that cannot be. And option is more desirable to accept, it could mostly generate positive option A, sorry, option A 400, right, option B limit to here, highest NPV 400. But if you look at option B, they also generate positive NPV, right. If option second one, option B is more desirable to accept as it could generate higher average NPV between 200 to 300 in this range, right, at a high frequency, because this company is a tolerance, the company has a high tolerance of risk. That means they are willing to take higher risk. It's a high tolerance of risk. Therefore, they will try to get the higher NPV. Therefore, this one major high probability, therefore a low NPV, but option B gives the high probability of, sorry, high probability for higher NPV. Therefore, if you have a higher risk tolerance, then you will go for option B, okay, 200 at a high frequency. Both option A and B are equally desirable to accept as both could assure an average positive NPV around 200,000. You can't say like that, because we can accept only one, even there is a positive NPV, because these are mutually exclusive projects. C is not accurate. Neither option A nor B are desirable as both options do not indicate a suitable NPV amount. No, majority of they are in the higher NPV, net NPV. Therefore, out of these four explanations, the suitable explanation is B, because option B is more desirable. Majority of NPV fall into 200 to 300, high frequency. It is greater than option A. Therefore, correct answer is B. The correct answer is B. That is the answer for 9th question. Right. We will move to the final MCQ question. Okay. A stock with a nominal value of rupees 5,000 generate an annual interest of 9% for its investors. Right. It will give 9% for its investors. Then, if the anticipated interest rate of the investor is 8% per annum, what would be the fair value of market stock? Now, if you look at about this situation, the coupon rate, the given rate, I will say coupon rate is greater than your required rate of return. Then that means the stock is value more than 5,000. It's a premium. You have a premium. You are willing to pay a premium to purchase this stock. According to your perspective, to earn 8% return, what should be the investment? At the current 5,000 give 9% return. That means 450. To earn 450, you expect only 8%. What is the amount you are willing to invest? Right. Then 450 divided by 8%. 8%. Then you are willing to pay 5,625. 5,625. If you look at if you purchase this instrument at 5,625, take 8%, you will earn 450. Even you are willing to pay 5,625 to acquire this investment, which gives 450 as a interest, right? The correct answer is D. Correct answer is D. This is the correct answer. Okay, that's all about our MCQ section. You have gone through each of the area. Now we have discussed 10 questions which are tested in different section. Now you have an idea how to deal with them. In the MCQ question, it will give you 20 marks, right? Each question give you 2 marks. I think you have seen how to tackle them. You need to, the recommended time for these 10 questions are 36 minutes, close to more than half an hour, but close to half an hour. Therefore, first section we have done with MCQ questions.